In today's video, I will be breaking down a trade I took at 9 o'clock today. It was a quick 5-minute trade. I will be explaining my entry, why I took it, my risk management, and what led me to stick in the trade to capture my most amount of profit, which is technically part of risk management. And it was a 1 MNQ trade, captured 14 points, which is roughly around $27. And keep in mind that 1 NQ is $270. Like I said in my previous videos, basically you just want to capture the most points. Profits will come to you when you increase your contracts, but as long as you have a consistent strategy, you should be good. And here's the clip of the actual trade playing out. As you can see on the right hand side of the screen where my cursor is, we entered at the close of the momentum shift, and we are in an uptrend on the 1 minute chart. So I bought in here, took maybe like 4 points of heat, nothing too bad, and then it just shot up in our direction. What led me to stay in is, if you look at the candlesticks, they all close above the fast moving averages, and with my risk management trailing it tightly, I managed to capture the 14 points, and it continued back down later in the day. And the reason why this was the only trade I took today is because we don't trade 2 hours before Fed news, and I am trading on Western time, so Fed news is at 11 a.m. for my time, which is 2 p.m. for Eastern time. So just keep that in mind. But took our trade, waited for the news, and that's basically it. Now let's get into the higher time frames. Here we are on the daily chart. As you can see, the daily chart closed below the fast moving averages, but it hit the bright green moving average, so this line is acting as support. If you look in the weekly, we went into the fast moving averages, which the zone from 17,415 to 17,135 is a weekly support zone, so we're still in that support zone. We just hit that support zone on the daily. Keep in mind, we are technically still in an uptrend, but that divergence is very strong now, as well as if it continues to break the levels of support, we are looking for shorts. So right now it's still 50-50. We want to see where the market wants to take us. Also today, Fed news happened, so it was that their interest rates are holding steady, or their rates in general are going to be holding steady. They're not going to be lowering them, cutting them, or they're not going to be hiring them. So the market went haywire. It went up, then down, then back up, then back down, and that's why you don't trade news. That's a gamble. So yeah, resistance zones are still the same. We are in our support zones, heavy support zones. If it breaks it, we can start looking for shorts, but still technically we are looking for longs. But it's 50-50. Give it the end of this week, maybe next week, to show us where the market really wants to go. And if you paid attention in my previous videos, everything that I said has started to play out, with the divergence acting up, with it closing below the fast moving averages, and with it hitting the support level. So if you really want to get a good idea of how today was going to play out in the morning, go watch my previous videos, as everything I said has started to play out. But we will see, like I said, next week until where the market wants to show us. And that's basically it. Make sure to like, subscribe, and I'll see you guys on the next one.